Welcome to the Deep Dive. We're your shortcut to getting up to speed. We sift through the sources, find the important stuff, and lay it out for you. Today, we are diving deep into, well, the company everyone's talking about, NVIDIA. You've given us quite the stack here, the Q3 2025 earnings call transcript, financial metrics, market analysis, news clips. A lot to work with, our job.
Yeah.
To really unpack these numbers, figure out the market reaction, which seems a bit strange sometimes, and pull out the key insights for you on this whole AI gold rush. Ready to jump in?
Absolutely. And what's really interesting, I think, is how these reports give us more than just NVIDIA's financials. They're like a window, a snapshot into this massive AI infrastructure build out happening right now.
Yeah, a real barometer.
Exactly. And it shows how much investor expectations are, driving the story. Even when the performance itself is objectively strong, it's a look at the state of play in, well, what could be a new industrial revolution.
Couldn't agree more. Okay, so let's get straight to the headline figures then. Because, on paper, NVIDIA delivered. They reported revenue of $46.7 billion.
Pretty staggering number.
It is, and it beat the analyst forecast by $600 million. That's about, 1.3% higher. And their adjusted EPS earnings per share that came in at $1.04.
Yeah.
Also a beat. Topping consensus by 3 cents or 3%.
Right.
So if I just saw those numbers cold, I'd think, wow, market must love this. A clear beat, top and bottom line. Seems like a straightforward win.
Well, yes and no. You're right. Those are strong results, no question. Any company would generally be pleased. But there's a crucial bit of context here, especially for NVIDIA right now.
Okay.
It's the size of the beat that's telling. It's moderating. While it's positive, it's actually a smaller beat compared to some of their previous quarters, where they just completely blew past estimates, sometimes by huge margins.
Okay. So the surprise factor wasn't as big this time.
Precisely. It tells us the game has sort of changed. Wall Street's expectations for NVIDIA have just soared. Analysts have been scrambling, really, to keep up with the company's growth curve. So that bar for a beat is set incredibly high now.
Right.
A 1.3% revenue beat, 3% EPS beat. Objectively good, definitely. But it's not the kind of jaw-dropping number that maybe the market had gotten used to from NVIDIA recently. It suggests expectations are maturing, catching up.
That makes sense. It's like that record-breaking runner. Just beating the record isn't enough anymore. You have to absolutely smash it to get the same applause. So still strong, but maybe not as shockingly strong as before because everyone expects greatness now.
Exactly. The element of surprise is smaller.
But even with that super high bar, there were definitely parts of the report that looked, well, spectacular. This is where I got really interested. Let's talk margins. Gross margin hit 72.4% JAP and 72.7% non-JAP.
Which is phenomenal.
Over 72%.
Sure.
For hardware, that's incredible. And then the star segment, right?
Yeah.
Data center. Grew 56% year on year, which, interestingly, matched the overall company revenue growth of 56%. What makes those margins pop like that, and what's the story with the data center dominance?
Okay, so connecting those dots, those margins, over 72%, are frankly exceptional for a company selling chips, selling hardware. It's not just about volume. It really speaks volumes about their IP, their tech leadership.
Their moat.
Their moat, exactly. It signals huge pricing power. They can pretty much dictate terms because everyone needs what they have for AI. It reflects two things mainly. One, that relentless, almost insatiable demand for their AI chips Hopper, Blackwell architectures are key here. And two, really tight cost control and efficiency in their operations and supply chains.
So they're selling something essential, and they're very good at making and selling it efficiently.
You got it. It shows that even as this AI market grows, they're holding on to incredible profitability because, well, their tech, and crucially that CUD software ecosystem around it, makes them indispensable. They're not just selling parts, they're enabling the whole AI build out.
Right, the ecosystem lock-in.
Definitely. And that data center growth, 56% year on year. That's just directly fueled by this global spending spree on AI infrastructure. Every cloud provider, every big enterprise, research labs, they're all buying NVIDIA GPUs. It's a fundamental shift, and NVIDIA is right at the epicenter.
Okay, so essential tech, premium price, great efficiency, software lock-in. Sounds like a fortress, like you said. Now, let's pivot to the future. That's always where the market gets jumpy.
Okay.
What did they say about next quarter's guidance?
Right, the outlook.
They're guiding for continued growth, projecting revenue of $54.0 billion next quarter, give or take 2%, which is, interestingly, only about 1% above what analysts were expecting, the consensus.
So quite close.
Very close. So the company's confident. Analysts are pretty much on the same page. But you look at the stock price reaction. NVIDIA shares actually dipped, what, 3.3% after hours? Despite the beat, despite the positive guidance? What on earth is going on there? It seems totally backward.
Yeah, and this is a really important point for you listening. It's almost a textbook example of investor psychology, maybe that hype cycle playing out. Why would a beat in solid guidance cause a dip?
Exactly.
Well, the guidance itself, $54 billion, it signals confidence, yes. But it also shows that analysts' models are now almost perfectly aligned with what management expects. Those days of NVIDIA guiding here and then delivering way, way higher, those massive upside surprises, they might be less frequent now, or at least the market thinks so.
So the wow factor in the guidance wasn't there either.
Kind of. The market sentiment seems to be interpreting these results as good, but not, breathtaking. And when expectations are just stratospheric, like they are for NVIDIA and AI, sometimes good isn't enough to avoid a bit of profit-taking or a slight pullback.
It's not that they did badly, it's that the market had already dreamed up something even bigger. Is it just short-term noise, or is something deeper happening?
It's probably a mix. You definitely have short-term traders, algorithms reacting instantly to any sign that their rate of acceleration is slowing, even if growth itself is still huge. For a company like NVIDIA, it's not just about growth, it's about faster growth. Any hint of moderation can trigger selling.
Okay.
But then you also have longer-term investors, the big funds, they're also looking ahead. They're constantly reevaluating. Could this explosive phase of AI build-out start to normalize a bit? Is competition from AMD, Intel, or even the cloud giants building their own chips going to start chipping away at NVIDIA's share or margins down the road?
So future worries creeping in.
A little bit. It's a forward-looking market. Any whiff of potential headwinds for that exponential growth can lead to this kind of reaction. It doesn't necessarily break the long-term story, but it signals a shift. Although, it's crucial to add, even with this dip, analysts are still overwhelmingly bullish. The average price target is way above the current price, around $266 versus $174, and you've got, 58 analysts covering it?
So the underlying belief is still strong.
Very much so. But the short-term market just demands more and more to keep those valuations climbing at the same pace.
That really paints the picture. It's this high wire act, where the bar just keeps getting raised higher and higher, perform brilliantly, but if it's not more brilliant than the last impossible expectation, the reaction is complicated. Okay, so let's distill this. What does it all mean for you, listening in? What's the takeaway on the AI gold rush?
Well,
It feels like NVIDIA is still clearly leading it, right? But maybe the character of the rush is changing slightly. We saw consistent outperformance, the beats were there, but like you said, the size of the surprise is shrinking.
right. Moderating surprises.
Guidance now lines up almost exactly with analysts. Wall Street and management see eye to eye, more or less. Those margins, though, 72.4%. Wow, that shows their pricing power is still immense.
Definitely a key strength.
But hanging over it all is this demanding market sentiment. In a sector driven by so much hype, even strong results get this complex reaction.
I think that's a great summary. What's fascinating, really, is seeing how strong fundamentals NVIDIA is still an AI powerhouse, no doubt, are being viewed through this slightly different lens now by the market.
Yeah.
The narrative is shifting maybe from pure, explosive, unpredictable growth towards something more like sustained, but still very strong expansion. It's a good reminder for everyone that in these super high growth areas, just being good isn't always enough for investors who've gotten used to exponential gains, especially if there are hints, even faint ones, of things normalizing or competition emerging down the line.
So the AI gold rush continues.
Yeah.
NVIDIA is still selling the picks and shovels.
Absolutely. They're still the main supplier.
But maybe we're moving into a phase where the easy gold is harder to find, and every nugget is examined much more closely. The market's already looking past the current boom to what's next.
Well put. It's about managing those sky-high expectations now.
A real shift in perspective. We really hope this deep dive into NVIDIA's quarter gave you a clear, maybe a more nuanced picture. Not just the numbers, but the dynamics shaping this whole AI landscape. Thanks for joining us.
And maybe here's something for you to chew on. As this AI infrastructure spending potentially does start to normalize somewhat, and as competition inevitably heats up, both from rivals and maybe even customers developing their own solutions, what's the next big thing for a company like NVIDIA? Where will they find the next source of that truly breathtaking growth that the market seems to crave to keep surprising and impressing everyone? What new innovations or markets will keep them ahead of these incredibly high expectations?